Assalamu alaikum friends, welcome to SBR revision series for September 2021, and today we are going to cover very important topic, IS 28 associate. You will definitely get this for your exam. Okay, 100 out of 100, 100%. The reason why, because this comes under your group accounting in question number 1 for 30 marks, right? You will be having some associate, some subsidiaries, or joint venture also maybe, but associates and subsidiaries always comes in the exam. You can be sure of it. So that's why it's very important to know few things about associates. One is the definition of associate, and the other one is how do you account for associate. So associate's definition is influence, significant influence. If significant influence is there, it is known as associate. Okay, associate is not a part of group, remember. That's why we never consolidate associate. Sometimes it happens that you were a subsidiary and then you have sold your shares and you became an associate. So from that day onwards, you don't consolidate. Associate is known as something external from the group. You are not having a control over that entity, but significant influence. Okay, how do you define significant influence in more detail? And remember, this IS 28 is not only for associate, it is also used for joint venture. If under joint arrangements you are a joint venture, not a joint operation, then you will be using IS 28. So the method that you are studying here for IS 28 under associate, remember this method. When I type joint venture, there also it will be the same method. Okay, but the name will be joint venture. So it's the same thing. Significant influence means you have the power to participate, okay, in the financial and operating policy decisions of an entity. And this associate, you have to know how to calculate, you have to know the definitions also, because for explanation purpose, for discussion questions, you will need this. And in terms of percentage wise, between 20 to 50% is an associate. So in the exam, they will not write word by word, okay, in a question. If it's a calculation question, group accounting questions, they will not say, okay, this has a significant influence. That means they have the decision to participate, power to participate in financial and operating decision. No, they will just give you the percentage. So based on that percentage, you can take for calculation when it comes for consolidation and all. But when it comes as a discussion question, you have to talk about the significant influence. That means the power to make decisions, whether they have the power to make decisions looking at the scenario, case study information. Those things then you have to tell. Otherwise, for consolidation purpose, only the percentage is enough. 30%, 40%, 45% associate. Okay. So how do you account for associate? You use equity method, both for joint venture associate. Okay. And how do you calculate equity method? It's on your right side. So in your statement of financial position, how do you show this? Where do you put this associate? You start with the cost. Okay. This is just the working. The final amount only you are putting in the statement of financial position. So the cost, you have purchased this associate, and what is that cost? Purchase consideration. So that amount you start with. Okay. Next, you have to add the share of increase in net asset, because that increase in net asset is only taken as the profit, share of post acquisition profit, you can say. Post acquisition profit increase in net asset is the same thing. Okay, when you're making your net asset table, that working number 2, at acquisition date, at reporting date, whatever is increase, on that increase you have to take the associate's share. Let's say associate is 30%, so 30% of that increase in net asset you have to add with the cost. Next, deduct impairment losses, because net asset is a post acquisition profit, so from profit you deduct your expenses. Impairment losses and expense, so deduct impairment losses. Then the amount that you get, investment in associate, this is the amount that you have to put in the statement of financial position. Investment in associate. Okay, this is the pro forma, standard pro forma, both for joint venture and associate. You have to know this. Cost, share of increase in net asset less impairment cost, if there is any impairment losses. If not, then just the share and the cost. That will be your investment in associate. Coming to the statement of profit and loss. Profit and loss, what do you record? Only the group share of the associate's profit after tax less any impairment loss, if you have any impairment loss. Okay, group share, that means let's say group is having 60%. So 60% of the associates profit after tax you have to take in the group, because in the profit and loss when you're preparing, you don't consolidate associates assets liability line by line how you consolidate for subsidiaries, but under profit and loss you have to take their uh, you have to take the group share of their profit, associates profit after tax. Okay, so these are the few things that you have to know about associate. Other than this, you will not be tested on associate. Okay, so till then, thanks for watching. And next standard IS 32 financial instruments presentation. How do you present? For example, how do you classify financial asset, financial liability, equity instruments? That's it only about IS 32 we are going to discuss. So till then, thanks for watching and see you in the next video.